Uh-oh, friends, this is not good. Many are raising concerns over the latest Social Security Board nominees plans for the program. Some say these future plans for Social Security reform could negatively affect millions of Americans. This includes changes to benefit amounts. My dear friends, please do me a big favor and watch until the end of this video, especially if you receive Social Security benefits. Also, every Friday, I will be announcing several winners for the Walmart gift card giveaway. If you would like to enter these weekly giveaway, friends, do make sure that you click and like several of my videos, and then comment below the keyword of each video that you watch. The more videos that you comment on, friends, the greater your chances of winning the giveaways.
I'll now recognize myself for 4 minutes to give an opening statement. Thank you, Secretary Yellen, for being here today and just your capacity as chair of the Financial Stability Oversight Council. FSOC's purpose is straightforward: to identify risks that could impact our financial stability, promote market discipline by eliminating expectations of bailouts, and respond to emerging threats. FSOC's name pretty much sums up its mission. And yet, under the current leadership, we've seen FSOC expand its regulatory reach to fit the administration's political priorities. That's unfortunate. And unfortunately, FSOC appears to be a part of the same troubling trend as Biden's other financial regulators. When you're distracted by shiny partisan objects, you take the eye off the ball. For example, aside from a stale mention of interest rate risks in 2022, the annual FSOC report of that year, the FSOC did nothing to identify the emerging instability that set off the March 2023 banking sector turbulence. And indicators produced by FSOC's research arm, the Office of Financial Research, showed no signs of emerging risks, even as the risk was indeed emerging. Secretary Yellen, we remember the panic Americans experienced in March. I commend you for your willingness to engage in stabilizing the markets. I think that with your credibility, lent a lot of effort to the administration. And at that time, we worked together to quell concerns and provide a level-headed response in an uncertain time. The goal was to do no harm and regain stability without injecting politics, and I think we achieved that. A goal that President Biden clearly did not share when he took advantage of the situation to blame Republicans for what was a widely bipartisan regulatory reform law enacted a few years ago. In real time, many members of this committee stood behind regulators' emerging actions with the expectation that we and the public would receive a full accounting of the decisions made that week. Now, nearly a year later, we do not still know the full story as FSOC and other administration officials have been less than transparent. To be clear, this does nothing to calm the nerves of an already skittish consumer. And with issues still plaguing some regional banks, it's irresponsible for this administration and fellow regulators to continue to stonewall. While Republicans have worked to get the answers the American people deserve, FSOC has been busy making changes to enable it to serve as a roving regulator, something architects of the Dodd-Frank Act vigorously promised FSOC would not be. This includes relaxing the criteria used to designate non-bank financial companies as systemically important and putting them under Federal Reserve regulation. This proposal is based on the premise that our financial system would be best served with more oversight and control by the Federal Reserve, even beyond banks. It's important to note that the gross incompetence of the Federal Reserve and FDIC supervision is what led to the bank failures in March. However, prudential regulation is grounded in mitigating the specific risk that bank activity poses. These regulations are not necessarily appropriate for institutions that may engage in different activities and therefore pose different risks.
According to Newsweek, Senator Sherrod Brown criticized Andrew Biggs, a nominee for the Social Security Advisory Board, over his views on program reforms during a Senate Finance Committee hearing. The renomination of Biggs, a senior fellow at the American Enterprise Institute, has sparked alarm among Democrats because of his history of advocating for Social Security privatization and raising the retirement age. Biggs' confirmation could signal shifts in the direction of the program, which would affect millions of Americans who currently rely on it. Senator Brown has raised concerns over a previous comment made by Andrew Biggs. He said that Congress should keep all options on the table. According to Newsweek, Senator Brown takes this as an indication that he's open to privatizing Social Security and raising the retirement age, which could affect workers in physically demanding jobs. Senator Brown has said, Social Security matters to them, and if you think about raising the retirement age, as you've advocated, and others have advocated, it's that much longer those people have to wait. Brown's questioning suggested that Biggs' views could lead to changes in Social Security that might disproportionately impact certain groups of workers. President Biden renominated Biggs to the board in mid-January, reflecting the procedural norm that board appointments, while typically spanning 4 years, can be shorter because of Senate rules on nomination renewals. If confirmed, Andrew Biggs' term, which is set to conclude on September 30th of this year, aligns with the practices, ensuring oversight while allowing for administrative flexibility. In a Wall Street Journal piece published in December, Biggs expressed views that challenged the common perception of Social Security as an earned benefit. He argued that most Americans receive more in Social Security and Medicare benefits than the taxes they paid into the programs, suggesting the benefits are neither fully earned nor self-funded. Biggs also highlighted the financial disparity that future retirees will face, with a projected insolvency of Social Security trust funds necessitating a 25% cut in benefits. Newsweek has also noted that Biggs has indicated a need for reform, suggesting that benefits for wealthy retirees could be reduced, while protecting those who rely heavily on the programs. He suggested during a previous Social Security, Pensions, and Family Policy Subcommittee hearing that the retirement age can be raised, pointing to historic trends. So, dear friends, what are your thoughts on this? Please let me know what your thoughts are in the comments section below. According to Yahoo News, having a car is also getting very expensive for drivers across the United States, as auto insurance premiums continue to increase. A new Bankrate report found that U.S. drivers are paying an average of $2,543 annually, or $212 per month for car insurance. That is an increase of 26% from last year. Greg McBride, the chief financial analyst for Bankrate, told reporters auto insurance rates have been rising at a breakneck pace. And though the pace of increases will eventually slow, that does not mean that premiums are coming down. In addition to inflation, there are other factors beyond a driver's control, such as weather and population density, that play a large role in the price of their insurance. For this reason, car insurance rates are greatly affected by where a person lives. Throughout the country, auto insurance costs have continued to climb over the past few years as natural disasters have become a greater threat to drivers and as vehicles prove more costly to repair and to replace. The states where the true cost of car insurance appears to be highest are those frequently affected by natural disasters, such as tornadoes and hurricanes. So, for example, in Louisiana and Florida, where severe weather events have become increasingly common over the past several years, drivers are paying the largest share of their paycheck towards their car insurance than drivers in any other state. Well, my awesome and amazing friends, that is the end of my daily stimulus update video for today. My dear friends, thank you so much for being part of this community. To say thank you and to show my appreciation, every Friday, I will be announcing several winners for the Walmart gift card giveaway. If you would like to enter the weekly giveaway, friends, do make sure that you click and like several of the videos and then comment below the keyword of each video that you watch. The more videos that you comment on, friends, the greater your chances of winning the giveaways. Thank you so much, and have a wonderful and very blessed week.